Thank you, Mr. Chairman. I appreciate all the witnesses' time and testimony today. As someone who passed the Nebraska Financial Innovation Act to allow state-chartered banks to custody digital assets in my home state, I'm really interested in the pathway for states and appreciate Superintendent Harris, you being here today, and your testimony. As we think about legislation, can you describe why maintaining a robust role for state regulators is important?
Absolutely, sir, and thank you for your question. I think we see the success of the dual regulatory framework on the banking side, and it's something that we should seek to duplicate when it comes to stablecoins. I think the main virtue is the nimbleness with which state regulators can act, and you see that evidenced in New York with our one-to-one reserving requirements. All the things we've talked about here today are already in place in New York because we can move more quickly and stay abreast of developments in the space.
In your position, can you tell me other states that you think are at the forefront of stable coins and understanding this space, and state regulators that have maybe taken some steps to be more innovative?
So Illinois has recently announced that they are going to take the New York framework and duplicate it in Illinois. I understand that's the case for a number of other states that are exploring that as well.
Okay, thank you. It's important that the pathway to becoming a stablecoin issuer remains open for new entrants. And I want to just take a second, Mr. Disparte, do you view the current path for non-banks in the current draft legislation attached to this hearing as achieving this goal?
Thank you for the question, Congressman. I do think it is really critical. The United States of America is an outlier among the advanced economies in the world in not having a federal payment system charter. The best alternative we have, if companies like PayPal and Stripe and Apple Pay and all these other services can exist, is state oversight. And I do think it's really critical that a Circle enjoys competition in the future where a comparably regulated and structured stablecoin might exist, also referencing the dollar. The real next breakthrough is fungibility and interoperability of those payment systems as well. And so preserving a bank and non-bank pathway for digital currency issuance in the country is going to be really critical.
One of the issues that I've dealt with in Nebraska is that we oftentimes don't really appreciate, I think consumers don't appreciate that the word bank comes with a level of security that you can't get in a lot of countries around the world. Allowing non-bank entities access to the federal payment system is a big step for Congress. It's a big step for this process. It comes with it FDIC oversight, the Federal Reserve. Can you respond to the concerns that someone might have about allowing an entrant into the federal payment system, and how do we weigh whether or not we do it with a non-bank entity, which I really think is an open question. I'm concerned about it. I'd like to know your thoughts.
Again, here too, if you want to really understand the competitiveness gap the United States faces, the inability for the Central Bank of the United States, the Federal Reserve Board, to provision federal services to non-bank actors is an enormous gap. Again, we're an outlier compared to the United Kingdom, Europe, Singapore, many other countries around the world, and indeed, the digital currency space race analogy is precisely that. There's 114 central banks around the world representing 95% of global GDP, developing solutions around this digital currency question. And that could include the provision of central bank custody for cash reserves. We're on the cusp of launching FedNow in the United States. If FedNow is going to work, FedNow has to be provisioned to non-bank actors. The banks, I hate to say it, have no incentive in competing past fee interest incomes. Right? To be banked is expensive in this country. To use basic payment services is expensive in this country, and we exact the highest fees from the people who could afford it the least for very basic services. Those services, I might add, also enjoy a public backstop. The last time we socialized, losses to trillions of dollars was in bailing out the very banking system. We just saw 3 of them bailed out recently. And so payments competition is critical. Legitimizing it at the federal level would merely level the playing field between the United States and other countries.
Do you think that non-bank entities then would also welcome all of the steps that we require, like federal FDIC insurance, the exams? I mean, one of my concerns, and I think it's an honest concern, is if we let non-bank entities enjoy the benefits of banks, that could make it difficult, I think, we can't have a collapse. We can't have a calamity. We can't miss for the American consumer. Thank you. I yield back.